The first thing I want you to know about me is that there's very few things I'd say I've actually succeeded at in life. Trading is one of them. I've made millions of dollars trading Forex and crypto and stocks over the past decade. And I've proven this because since 2018, I've shared my live trades and analysis here in my free Telegram channel. And just last week alone, I made $380,000 just trading Forex alone. So I'll put a link in the YouTube description if you want to join this free Telegram channel. It's just where I share all my trades and analysis live every day. But the only thing I've really succeeded at that I'd say is trading and my relationship with my wife. I've tried so hard to be a great person to people. I've tried so hard in multiple different businesses. I've tried hard to be great in terms of like other personal endeavors and hobbies that I've done. And all of them I just feel like I've failed at, except for these two things. And I want to highlight what I think the difference is between why I've succeeded, quote unquote, at trading and being in a good relationship with my wife. And I think these reasons are because I've actually done less and only the core simple things that I believe really matter. And everything else, I just feel like I've tried too hard. It is a really weird paradox that I've struggled with for quite some time. And so, what I see today is that, especially with all the information we have here in the trading category and niche here on YouTube and social media, people teach you to do all sorts of things that really don't matter. And they teach you to do all these things at the cost of what I believe the things are that really do matter. And so what I want to do in this video is I want to break down exactly the way that I trade. And I promise you this, it's very, very simple. It's very, very easy to duplicate. If you cannot do what I'm about to teach you here in this YouTube video, then I really recommend that you just quit trading and try to do something else. This is the absolute most simple, distilled way of boiling everything down so that way you can actually learn how to trade profitably. Okay, and I teach everything for free on my YouTube channel here, and then I also share my analysis and trades live in my free Telegram channel. I'm giving you every single thing that you need to do to become profitable. So I want you to take what I'm saying here and really apply it here in this YouTube video. So the first thing that I'm going to touch on, and we'll start by just going through my current analysis of the trades I'm looking at this week. You'll notice my charts here on TradingView, they're just black and white. There's nothing, there's no pyrotechnics, there's no mental gymnastics, there's not a lot of crazy analysis. All I use black and white charts, a black background with white candlesticks. I really recommend that you set your charts up this way because it makes things very, very simple. You don't need to have different colored candlesticks to see the bullish or bearish candles. You don't need to have crazy backgrounds. You don't need to have a layout for each market environment you're trading. Everything can be super, super uniform and simple. And this takes out a lot of emotion too, because if all the candles are white and you just have a black background, there's less emotional reaction and less neuroticism whenever you're going about trading. So black and white charts, and you'll see the only basic analysis I have on here is just these lines, these horizontal lines, which we just call support and resistance zones. That is all I use to trade with. I just use support resistance. I combine that with a little bit of price action analysis, and that is how I take my trades. If I were to sum up my trading approach in one simple sentence, it would be I buy at major support zones and sell at major resistance zones on the daily time frame. It's basically all I do. I use weekly a little bit and I use 1 hour a little bit to get context for the price action. But basically, if you boil everything down, I go to the daily and I buy at support and I sell at resistance. So whenever you're looking at my analysis here, you can see Euro GBP. I think price might bounce here at this little support zone on the daily chart. When we go to the next potential trade after that, there's GBP JPY. So if price comes back up into this resistance zone, I'm looking to sell. And then this is the same thing over and over again. CHF JPY, this is a trade right here that I took last week where I made $100,000 on this trade alone. So this trade closed last week. But I took it, I think, a week and a half ago, but it closed last week in profit. It was this really big winner here that I'd shared on CHF JPY where I made like $100,000 on it. So there's CHF JPY. You can see I had to break up the positions into 2 entries because my broker only allows me to trade up to 75 lots per individual entry. I guess so I can get filled appropriately or something. And there's like a max position size of something. I don't know if it's like 750 lots or something, but so I had to break it up into 2 positions. I risked 100,000 to make 100,000, and in this case, I came out in about $100,000 profit, even after profits, fees, swaps, commissions, and everything. And the way that I trade is very, very simple because all I do whenever I trade is I go to these major support resistance zones, okay, again on the daily, and whenever price gets to one of these zones and I think it's going to bounce, all I simply do is if it's at resistance, I enter a sell. I put a stop loss above the zone, and then I put a target below the zone at a 1-to-1 risk to reward ratio. Okay, it's super, super simple, and I guarantee you I'm not playing. Like, go to my Telegram channel. You can follow those trades live, and you can see all of this happen like in real time. This is all I do. I just buy and sell support resistance zones. So the same thing down here. If price gets into this support zone, all I'm going to be doing is buying here at the support zone with a stop below and a target above at a 1-to-1 risk to reward ratio. And doing this over and over again has taught me something very, very important about trading. And it's that I really do believe people are just doing so many things that are unnecessary. People are spend so much time trying to do all this sort of technical analysis, all this fundamental analysis, looking at the economic news events, looking at policy changes and like fiscal policy and different central banks and their tax rates and interest rates and everything. And it gets to the point where you have so much information overload that you can't even make a rational decision. And even if you make what you would call a rational decision on the basis of so much information, you'll find oftentimes that you're not right or wrong any more than like 50% of the time. Because you can get a 50% win rate by just flipping a coin and buying and selling anywhere on the chart. You buy if it's heads, sell if it's tails. You can literally get a 50% win rate by just doing that. And you can be a break-even trader by just blindfolding yourself, entering random buy and sells with 1-to-1 risk reward ratios and letting price hit the profit target or the stop loss. Like you'll do better than 90% of traders if you just do that. And that's kind of sad. Blindfolding yourself and entering random buys and sells with 1-to-1s. It's kind of crazy, but it's the truth. Go try it for yourself. So what I do here is whenever I get into a trade, one of two things happen. Let's say there's like a nice major support zone, okay? So price has been going up. It comes and bounces at this zone, and then it comes here, and then it starts bouncing. So for example, all I would do here in this case is once price gets into this little zone where price has bounced at multiple times in the daily chart, I will then look to see if price starts to bounce a little bit away from it and starts giving me a little bit of an indication that it's trying to move upwards. And if it does start trying to bounce a little bit and it doesn't break through immediately, then I'll enter a buy. I don't put my stop loss just below the zones like this. I find that price can spike through the zone sometimes like this. And if you have your stop loss too close, then the spreads during session changeover or just price alone will go and hit your stop loss, and then it will cause you to lose a trade that it's not technically invalidated. So I use stop losses that are pretty far past the major support resistance zones, and this gives me plenty of room to manage the trade early should it start to go against me. Now, by managing the trade, here's what I mean. If you enter a trade and then it just starts going sideways like this, usually most of the time it's a better idea to just close that trade at a break even or a small profit or a small loss. The reason is because if you're right, then you want to hold the trade. You want it to go to your profit target and you want to be able to hold that trade. And if you're using 1-to-1 risk reward ratios like me, for sure, at least whenever you're starting, just use 1-to-1s. You can always change it later. But if you're using 1-to-1 risk reward ratio like me, you hold it to the 1-to-1 risk reward ratio target on average, right? Some of them you might be able to get out early if it's like a Friday and the market's about to close and it's almost to the target. Okay, fair enough. But most of the time you want to hold to a 1-to-1 risk reward ratio. But if it starts going against you, trading is interesting in the sense that you can actually close the trade early, right? So if it starts going against you, you can quote unquote manage the trade. What does that mean? Manage the trade is any sort of action that you take in the duration of the trade from the moment you enter to the moment that it plays out and you end up closing the trade in either a profit or loss or a break even. So let's say that I enter this trade and then price starts breaking below the zone and then it closes like this on the daily chart, right? It closes with a bear candle below the zone. Well, in that case, 9 times out of 10, I'm probably just going to exit the trade. And then you end up losing the trade right there, which in this case, it's like almost halfway to the stop loss, right? So you would take 1/3 to maybe 1/2 of whatever the actual total potential loss could have been. And then what happens after that? Well, a couple things, right? So you exit the trade. It could pop right up here to the resistance zone. And when it pops right up there to the resistance zone, what you could do is you could sell because now it's broken below. So you sell right here, you put your stop loss nice and clear above the zone, you put your target at a 1-to-1 risk reward ratio, then you do the same thing. If price starts to bounce right there and it starts to go down, you hold it, and then ideally until the profit target's met. If this doesn't happen and it breaks back up again, then what you can do is you can close that trade at a loss right there, okay? So on this first one, let's say that you would have closed here, and let's just say it was like, 1/3 of the way to the stop loss, you lose that one. Okay, so then it comes back up here. You enter this sell because now you're trying to anticipate that, okay, it's a break and then a retest. Now it might bounce and continue down, but that doesn't work out. So you close that at a loss. Now you've lost another 1/3 on that. So far you've lost like 2/3, right? You lost 1/3 of the stop loss here, 1/3 of the stop loss here. And then guess what? If it comes back into the support zone again, provided that it's a really clear support zone, well, you can just buy again. So you buy there at the zone, and then let's say this is the one that works out. It goes up to where I'm trying to get the little arrow tool here. So it goes up to the profit target and you win that trade. Okay, cool. So you took 3 trades, you lost 2, and you only won 1 of them. So with this being said, you would lose 2. You lose a third on each one. That's 2/3 of 1 unit of risk. If you're risking, say for example, like me, I risk anywhere from $50,000 to $100,000 per trade on average. Sometimes a little less, sometimes a little bit more, like 125,000 or 150,000, just depending on the quality of the trade and the context, based on my 10 years of experience seeing these same charts over and over again. If you're risking, let's say, $100 per trade, you lose this trade for $30, you lose this trade for $30, and you win this one for $100. Okay, 30 plus 30 equals 60. 100 minus 60 is you still come out in a $40 net profit, and that's only winning 1 trade out of 3, right? So you have like a 33% win rate, but you still made a little bit of a profit. The cool thing about trading this way is that it actually teaches you how to use your skill set to get out of trades that are not working and to hold trades that are working. There's an age-old saying that goes, you should hold your winners and you should cut your losses. All that means is that if you're in a losing trade and it looks like the trade's not going to work out, as you get experience, you'll start to be able to get better at this. Just close the trade. You can always re-enter. You can always just jump right back in if you change your mind. But by closing a trade that's going against you and not working out, it prevents your downside from becoming too big. So it prevents your downside from like you being able to lose like 10 trades in a row, 5 trades in a row. And if you're using 1-to-1 risk reward ratios, instead of letting the stop loss take you out, you can be the judge of actually looking at price action and making that decision to just close it on your own. Okay. A lot of people, what they'll do is they'll say, well, it's the same thing if you just put your stop loss below the zone and then you have a 1-to-3 risk to reward ratio. And then if it hits your stop loss, right, you just risk a third of what you normally would have risked. So instead of risking 100 on this 1-to-1 trade with the stop loss all the way down here, you just risk $30 on this trade. And then look, it's the same thing, Nick. You know, it goes and it hits that stop loss and you still lost $30. It's the same thing. On paper, it's the same thing, but in practice, it's much different. Trading is dynamic and price is not perfect. And a bunch of little super context-based, nuanced things will happen in the subtleties of the price action that can allow you to actually manage a trade more effectively, more efficiently, and just with way better outcomes if you do it manually, because then you're actually learning the skill set of trading, which is discretion. Discretion is the only thing that makes a manual trader profitably. You can do all sorts of math to try to justify a trading approach and try to get the win rates and the risk reward where you want it to be able to make a profit long term. But ultimately, what makes a manual trader profitable, unless you're a billion-dollar hedge fund trading with algorithms and quantitative trading, you have to be able to use your head. You have to give like 2% of your brain the ability to look at the chart and make a subjective judgment that we call discretion or intuition, to be able to make a decision based on what the context is. And that decision can be to hold a trade. It can be to add to a winning trade and move the previous trade's entry to stop loss to break even. It can be to close a losing trade early. It can be to add to a losing trade sometimes. If price gets to the next zone and you've pre-planned you can do that, sure, you can add to a losing trade. There's no steadfast black and whites or absolutes in trading. Quite literally, there's no right or wrongs in trading. It all comes down to your subjective experience. And I'm giving you a simplified framework for how to approach that, right? How much harder can it be? You go to the daily chart, you buy at support, you sell at resistance. If it starts to win, you hold it. And if it starts to go against you, you get in the habit of closing it early or a break even, you know, whatever it happens to be. So this is a great system that I've used for quite some time now. It took me about 2 years to get profitable back when I first started trading in March of 2016. About a year and a half, I was doing pretty decent, but I wouldn't say until it was around the 2-year mark where I actually say, like, I give myself the stamp of approval and say, okay, you're making a couple $100 a week to sometimes a couple $1,000 a week, depending on the week at that time. And I would give myself that stamp of approval to say, yeah, the summer of 2018, I was pretty profitable. That's when I started my free Telegram channel in the summer of 2018, when I felt confident sharing my analysis. And I shared it basically as like a trade journal for myself, but over the past, what's it been? It's been almost 8 years since I've been running this. We've grown to like 50,000 members in here. And so that's all I do is I just trade support resistance. Now let's look at a trade that I'm looking at taking right now. So in my private group, this is a Discord server where I share all my personal trades that I'm taking live. I'm looking at actually taking this AUD Canadian dollar trade right here. So if you look, this is on the daily time frame, and price on AUD Canadian dollar is close to a major support resistance zone. So what we're going to do is we're going to go to the weekly time frame and the daily on the actual trading view chart. We're going to look at it a little bit more closely. I'm going to show you what I'm looking to trade on this and why, and as well as how I'm going to structure the risk. So we're going to go here to AUD Canadian dollar. And you know what? We'll start from scratch. Let's just start from bare minimum basic. I'm going to delete everything from the chart. Okay, so we're here on the daily chart and we have AUD Canadian dollar right here. So a couple things on the chart. We've got a support zone somewhere down here. We could use these most extreme lows if we want to be safe. We've also got a resistance zone up here because that was the highest point price had recently dropped from. And we've also got this zone somewhere in here, right? Somewhere around these highs. So what I do is I draw the zone where I believe it's most relevant. In my case, it's right here because price has bounced right there as resistance, resistance, resistance with a little bit of leakage through. Then we came here, we pinned this area as support and jumped up above the zone. That's why I say price is not perfect. That's why I don't like using like super tight stop losses. We came back here, we bounced again, and now it looks like we're actually coming back in here to maybe test it for a third time. So all I'll do is whenever I have a zone that is pretty close to price, current market price, I'll just set an alert near that zone. And then if price gets there, I'll get my alert and then I can be able to buy after we get some rejection. What does that rejection look like? Here's all it is. Price comes into the zone, and then either on the 1 hour or 4 hour, you can use whichever one you want, like whichever one you feel more comfortable with. I've been doing this for a while, so I'll use like 1 hour mainly for this, but it's not complicated. Here's all you're looking for. Price comes into the zone, and then it starts to bounce up. Okay, that's all you're looking for. The thing that you're trying to avoid is stuff like this, where price gets into the zone here on the 1 hour and then immediately breaks through. This will save you from so many pointless losing trades. This is why I don't use limit orders. If you just set a buy limit, a lot of times what you'll see happen, not every time, but a lot of times, your buy limit order will get filled. It'll trigger you into the trade, and then you'll get into a buy, and then price will immediately break through the zone within the next few minutes. I don't like that happening to me. So I've learned it's better to, instead of entering first, I wait for price to start kind of bouncing away from the zone first, and then I enter. See, so like, and even if you would have got stopped out on this, the very next candle pushed above this zone, closed. The next one closed with indecision, and this one started breaking the highs. So this still gave you enough information to enter this. Even if you would have lost that first trade, you probably would have won the second one as price had a nice little move off this zone. So with where we're at right now on price, you could see very recently here last week on the 29th of April, we're currently on May 4th, right? So a couple days ago last week, price was here at this support zone. We came here and you can see we immediately bounced and we rejected. Look at the way this candle painted. It just pinned into the zone, it pushed up, closed a little bit of a bullish wick. And if that wasn't enough, the very next candle did the same thing. Came into the zone, pushed up, closed with a bullish wick. So if you would have entered a trade right there, here's what it likely would have looked like. You could have entered a buy. Let's say on the first one, it pops up, it closes up there, so you enter a buy. We want to put our stop loss nice and clear below the zone to give ourselves plenty of room. I would probably have also put mine below that most extreme low down there just to be a little bit safer. Okay, cool. So we've got a stop loss nice and far. And then I just dragged the profit target to a 1-to-1 risk reward ratio. So in this case, what would have happened is it would have gone into profit a little bit, came back, bounced again at the zone, and went back up. Cool. What if whenever you enter, price breaks below this zone and then it closes below this zone with like 1 or 2 or 3 hourly candles, and then on the daily, you notice that it goes and it closes below this zone instead of bouncing. Well, in that case, you can put 2 and 2 or 3 and 3 and 4 and 4 together. So you just put everything together and you're like, okay, it's not bouncing here. It's closed below on the 1 hour with at least one candle, if not a few, and the daily candle closed below the zone. You can then take that, you could exercise your discretion to get out of that trade early. Okay, this is where the edge is. Because again, if you just enter 1-to-1 risk reward ratios and hold it, unless you have a lot of experience, and even then you're probably not going to get more than like maybe a 60% win rate. But even if you have a lot of experience, it just makes it really, really difficult because you're basically playing with a break-even system long term. Price will go up 50% of the time, it'll go down 50% of the time. So the key here is just to watch what price is doing, see if whenever you're entering a trade at that zone, if other people are entering at that zone by just watching price action and seeing price bounce away. That's a good sign other people are buying at the zone. And then using that to exercise your discretion. And if it goes into profit, you hold it. And if it starts going against you, then you close it. Okay, you're not going to be right every time. It's going to break the zone like, let's say like half the time, and you're going to lose a trade, and you're going to take a loss or a string of losses, and it's not going to be good. Before the win streak I had last week where I made $380,000, the previous 2.5, close to 3 weeks, it was at least 2 weeks for sure, I was on a losing streak. I lost trade after trade after trade after trade, and I lost $240,000 just in that time period of like 2.5 to 3 weeks. That sucked, but guess what? I had 2 winning trades, And because my winners statistically always outweigh my losers, I'm net profitable long term. This account that you're seeing here in Telegram, if you scroll all the way back, I started this account, I think it was like 6 months ago, but you can scroll all the way back here. I think it was in like October or November of last year. I started with $350,000, and now the account is up to, what is it? I think it's like 600 something. Let's see, 660. So $660,000. So I've almost doubled the account over the course of this time period, and really I've actually made more profit than that. I've made like 450,000. So I've more than doubled it, but you have to factor in the swaps and fees and commissions, and because of that, that ate into a lot of the profits, the commissions and the swaps and everything. So, but still, even with all the swaps and fees and commissions, and that taking like 150 grand worth of the profits, I have still managed to almost double the account in this time period. And if I can just double the account like again to the end of this year, that will mean that I take this $600,000 account up to like over $1 million. And that's my goal, is once it gets to $1 million, to withdraw half of it. That'll be 500K. And I'm going to take half of that. I'll owe capital gains tax on that, which for my tax bracket's like 37.5%. So about 40%. So I'll withdraw 500K. I'll send an estimated payment of $200,000 to the IRS for taxes. And then I'm left with 300K. And I still have an account that has 500,000 in it that I can then be able to continue trading with, and then hopefully grow it back to $1 million and do this over and over and over again. So if I'm able to say triple the account over the course of an entire year with very specific risk parameters and using my experience and discretion, that's a pretty great return, especially whenever out of my multi-millions in trading capital, only a small percentage of that is allocated to Forex trading. And then on top of that, the money I put into in a trading account is a small percentage of the capital I have allocated to Forex trading. Because I have millions in crypto, I have millions in stocks and equities, mainly the S&P 500. And then I also allocate about a third of my capital, a fourth to a third of my capital to Forex trading. And of that capital, I only put a small portion of it into a trading account, which in this case was like 350 grand. So with this, let's say I'm able to get this 350 grand to $1 million over the course of like, say, 1 calendar year, right? A period of 12 months. That's an amazing return. Imagine if you started an account at just like even like $10,000, and with controlled risk, you're able to grow that account to $30,000 by the end of a 1 year period. This may not sound sexy to a lot of people. It's certainly not as sexy as saying I started a $100 account and grew it to, let's say, $1 million in 3 months or something. You'll see some videos here on YouTube of people claiming they've done that. I'm not saying whether or not people are lying or whether it's right or wrong. I'm just saying if your goal is to start like a tiny account and then to grow it like 10,000% over the course of a very short time period, which I'd consider that kind of return over the course of 1 year and certainly over a few months, I'd consider that very, very, very extremely unrealistic, borderline pathologically lying if someone tells you they can do that. I've just never personally seen it done, honestly. And that doesn't mean that it can't be done. It just means that if you're focusing on that, you're probably more likely to just continue losing money long term. And everyone else who is okay with doing controlled risk, simple trading approach, and okay with like doubling or tripling their trading account every single year, again, with controlled risk. Every single trade has its own structured risk, and everything is all prim and proper and all suited up really nicely. If you're able to double or triple your account over the course of a year, that is amazing, right? That's beautiful. And let's say you actually have a lot of money to trade with, right? Let's say you're trading on like with $100,000 and you can grow that 100K to like 300,000 over the course of a 1 year time period. That is a phenomenal return, right? Most people make nothing. Like 95% or more of people lose money trading because trading is risky and most people lose money. It's hard. It's challenging. It's like anything else in life where you want to make a lot of money trading. If you want to be a doctor and you want to make $1 million a year, like that's hard. It takes a lot of time, a lot of education, certainly a lot more than I put into trading. And then a lot of those people, like I make more than most doctors every year. Like I make millions every year from trading and all sorts of different markets and investments in my business. And a lot of doctors don't even make anywhere near that. And it only took me like 2 or 3 years to get profitable trading. And then of course I've built my career over the past decade. If you want to be like an engineer that's head of an engineering firm and you own your own engineering firm, that's hard to do. A lot of people fail at that. If you want to be an attorney and you want to have your own private practice and you want to grow over the course of like 10, 20, 30 years, that will be your life's work. And a lot of those attorneys still don't even make as much as I do trading. And I'm just this guy, I'm a bald guy with a beard who just trades for like maybe an hour or two every morning, and then goes and screws around all day and makes YouTube videos, and I make more than a lot of other people who are professionals who have spent their whole lives doing it. But again, this is just to say that trading is very, very difficult because I think most people are not approaching it in a way that is optimal. They're approaching it in a suboptimal way. They're prioritizing all the things that are not necessary, and they're doing all those things at the cost of the things they should really be focusing on, which in my opinion is just simplicity and risk management. That's literally it. So I will be looking to buy AUD Canadian dollar if it comes in here into this zone and then it just starts to bounce a little bit. I'll be buying, I'll be putting a stop below this zone and a target above. And when you go to the daily chart, you can see that it's a very, very clear zone, and price is either going to do one of two things, right? When you enter, it's probably not going to go sideways forever, right? Could that happen? Sure. A tiny, super outlier statistical percentage chance to just go sideways forever. What's likely going to happen is it's either going to go up or it's going to go down. You will either be right and make a profit, or you will be wrong and you will lose some money. The idea in trading is just to lose a little bit less than what you make on average. So if you can make a little bit more on average and you lose a little bit less on average, and you put the whole conglomerate of the basket of the basket of winning trades and losing trades together, you want to make sure that you're just coming out on a little bit of profit long term. That's a statistically profitable system, and it's very, very simple to do, provided that you know these basic mechanics. You can apply them however you want. If you want to use fundamental analysis and economic context and technical analysis and all sorts of other crazy things that people do, be my guest. Go try it. Perhaps you have tried it and perhaps it's still not working out for you, which is why you're still sitting here watching this video from somebody who claims to know what the hell they're doing in trading. I'm just saying, I've seen so many more people get results, like live, real results, by just doing way, way, way less. And that's what I'm encouraging you to do here in this video. So I will be looking to take this trade throughout the rest of this week. I've also shared the rest of my analysis on my Telegram channel, so make sure you join that Telegram channel. Again, it's free. I'll put it in the pinned comment even, so it's easy for you to click it and join. You can be in there in like 10 seconds. You can follow all my trades and analysis, and you can see everything. I put little blurbs about, kind of what I'm looking at and what's going through my mind, what I'm thinking, and potential trades and everything like this. This is the AUD CAD trade today that I posted here. I said, I'm waiting. We need to see some rejection first. So make sure you just hit that link in the description or pinned comment. Just go check it out. That's all. Just check it out. It's completely free, and it's just there to help you learn how to trade. So with that being said, I'm going to get back to the charts and responding to some of my clients in my Discord server, and I will see you guys in the next video. I love you all. I wish you the best, and I really want the best for you in your trading journey. Hope this video has helped you. See you, my friend.